Hi and welcome to today's FatTel Daily. Today I'm joined by our tech analyst, Charlie Ormond. Charlie, welcome, buddy.
Morning.
Now, you've written a fascinating piece today about what could be the next major evolution in artificial intelligence. While most of us are still getting our heads around chatbots and generative AI, I think that's how you pronounce it, Charlie's been highlighting something that's potentially much bigger, something called Agentic AI. Now, what's particularly interesting is how this represents a fundamental shift from AI that simply responds to commands to AI that can actually take initiative and execute complex tasks. Now, Charlie, you suggest that this could be the catalyst that drives what the next wave of business transformation, similar to how the internet revolutionized business models in the late 90s. With 72% of organizations already using some form of AI, but many still holding back on full implementation, we might be at a crucial turning point, specifically for investors too, because it opens up all these different opportunities. So I thought we could just explore what all this means today for investors' portfolios. Now, mate, you make this interesting distinction between today's chatbots and agentic AI using the librarian versus personal assistant analogy. For investors who missed the early gains in companies like NVIDIA, what sectors or companies might be well positioned to benefit from this next evolution?
Yeah. Thanks for the good questions. I think this is kind of a bit of a look ahead piece. So let's start off by just saying that Agentic is just beginning now. But I think we've seen since the beginning of December, kind of drop back in a lot of the stocks. We're kind of in the Gartner hype cycle past that initial peak of hype for AI. So I think we've seen a pullback in a lot of different sectors where there's great opportunities. Mm-hmm. If you want to break it down sector by sector, I think finance and healthcare are really two easy ones to look at. When you've got an AI system, or if you look at what agentic AI is, it's just really an agent, like a personal assistant AI, right? So we can get into all the nitty gritty of how that kind of works, but in terms of, imagine any sector that has high staffing costs for assistants or benefits from that. So there's a huge range of sectors, but where we're seeing agentic AI on the ground today, it's certainly healthcare is the major one. Healthcare is where it's really already popping off.
So let's go backwards one step. So what exactly, just for people out there, what actually is agentic AI? I know it's this kind of, I'll be completely honest, I've never heard of it really. Don't know much about it. Maybe our readers and viewers are the same. Like, can you explain how significant it is?
Yeah, that's why I kind of wrote the article, because I thought, here's a new buzzword that's come out from Silicon Valley. It came around, first mentions around October. So it's still really, really, really fresh. So I thought, hey, let's let our readers know about it so they can kind of get ahead of the curve with this. So if we look at where AI is right now, essentially it's a question and answer machine, right? They're really helpful, but you just go onto your Claudes or your Geminis or whatever you might be using. You ask it a question, you get a response, sometimes worthless, sometimes actually really helpful. The new kind of agentic move in terms of a new era is one where it can kind of autonomously act, is the main one. It can reason, and it can interact with the environment, whether that be your phone or a web browser or robotics. So it's really stepping forward from just a question and answer machine to something that can actually help you in your day-to-day. So you can think of it like a personal assistant. That's the easiest way to think of it.
Yeah, right. And you reckon in healthcare and in finance, that's where the first initial...
Yes. So we're already seeing in finance, we're seeing there's model portfolio planners. So there's a couple of companies in America that I can't mention because we're looking at them for entries, but there's a couple there where they're using it for individual. So they would have a meeting with this chatbot. You would go through your financial plan, kind of where you're sitting at, and then it will kind of create model portfolios for you on the fly, and then help find entries and exits for certain stocks for you. So it's really far more proactive than the mutual funds that you jump into, and they would just be like, "Here's my money, investor as you will. It's very much you have your own personal assistant with investing, which I think is really exciting.
One of the reports you quote is the McKinsey data, which shows 72% of organizations are using AI in at least one business function already. But you suggest, obviously, that we're on the cusp of a much bigger shift. What specific market signals or early indicators should people watch out for to identify when the transition is going to start accelerating?
Yeah, okay. So that's a good point where it says 72% are already adopting it. But if you dive deeper into those numbers, a lot of it is still at this point where it's kind of basic content, right? It's making your email, or it's bringing some low-level marketing content into the line, or even just asking questions within the business. Once you see the agentic AI actually interact with company data, that's when you know that you're actually seeing proper adoption, because companies' data is now the new gold, right? I wrote a piece about this the start of the year, predicting this would be the case. The founder of OpenAI, one of the main founders, Ilya Sutskever, he's just actually said that the same thing, that we're running out of data. So looking at when AI interacts with specific companies' data is a big point to see when you're seeing the actual adoption of that agentic taking off. In terms of because that's harder for investors to kind of spot. I think that an easier one, if we look at, say, healthcare as an example, there's a couple of companies, Recursion is a good example, where they're using agentic AI to run their own experiments. So it will come up with new ideas for novel proteins or novel treatments. It will actually have its own pipette systems and be running its own experiments. So we're already seeing throughput there, but those are still in the early days of testing. They're like phase 1, maybe a couple in the beginning of phase 2. So when we see those actually being passed by the FDA and those drugs coming online, that's when you know that agentic AI is really affecting the market in a major way.
You compare the potential impact of agentic AI to like the internet revolutions, like I said in my intro, in terms of business model disruption. For those investors who remember the dot-com bubble, how can they balance the opportunity in front of them with the risk of overvaluation in the space too? Because it's very early still, right?
It is still very early. I think if you look at the ASX versus the US, there's two very different stories there, right? The US stocks, many of them are very, very expensive right now. Yeah. So I can understand the reluctance of many players to invest in that space. But if we look at ASX, specifically within the ASX Tech, it's the XTX technology sub index. That's down about 5.5% since December. We've seen a pullback from a lot of those tech names, but they're already getting a baseline. A good example was IRES, which is a financial software company. Again, huge opportunities in agentic AI for them. They were down 20% before going up 8% last Friday. So there's a lot of companies like that where we've seen a kind of general downtrend rather than the usual Santa Claus rally for the tech stocks, but a lot of them have already got kind of a clear baseline where they're going to pop again. So I think that for investors who are kind of reluctant to jump into an expensive NVIDIA, for example, there's a lot of opportunities on ASX where you identify things like data centers, right? So NextDC is down 15%, or I think 14.5% right now. A great opportunity for the long-term thinking right there. There's plenty more on that list. I think Life 360 is another example. I won't just give out a bunch of stock names, but there's a lot that are down in the double digits. Great opportunities, and I think that they're more reasonably valued than your US
US
players.
I was going to say everyone's focused on the Magnificent Seven, and they're highly, the PE ratios they're insane, but
they're off the charts.
But then, my next question was going to be: so you've named a couple of companies on the ASX, but maybe even for those companies that investors find on their own, what kind of characteristics would you be looking for within those stocks? Maybe we'll end up on that question.
Yeah, that's a great question. I guess you need to do a little bit of reading of either their call transcripts or their quarterlies and actually see how they're using the AI, because a lot of it is still in that kind of chatbot, generative AI era where it's very basic. It's not actually interacting with their data. So digging down and trying to maybe going into a quarterly, searching for the word AI within the chat and actually digging down to see where they're using that AI to see if it is actually providing value. Because I think obviously the first wave of value that everyone is going to see is probably a reduction in workforce, which is going to save the company money. That's kind of what everyone's expecting. But that can only go so far, that will eventually plateau in terms of the profit margin gains from companies. So I think it's actually looking at where they're using the AI and where they're using that with their data. And that would go to the last thing we'll go on to, which is how valuable is their data? Because I think data is the new oil in a massive way. So finding companies that have unique and robust sources of data. Life 360 is probably the easiest example I can throw out for you right now, where you've got a huge amount of retail data, which they're already selling to other companies, but also making great margins themselves with.
Fascinating. All right, Charlie, we'll leave it at there. Hopefully that was useful for everybody. If you would like to check out what Charlie's piece today in Fat Tail Daily, check out the link below. And well, hopefully we'll see you again soon, Charlie, when Ryan's off on he's doing something else today, working on something in the crypto space, but it'd be good to hear from you again soon on the tech side of things.
Yeah, we'll check back again and see how this is going on later next year.
Perfect. See you then. Cheers, guys.
Thanks, mate. Bye.
Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. Until next time.